All right, ladies and gentlemen, this will be our very last module, the third strategy that we use and trade with inside our private community and mentorship. Okay, so the idea behind this strategy is very simple. We call this smart money. Okay, whenever we have a clear trend in the higher time frame, what we want is basically we want a break of structure, and following that break of structure, we want either a two-step or a three-step correction back into our Fibonacci level of 0.88. Okay, this could be an order block that price comes back into, and then following that, what we want to see in the lower time frame is another break of structure, and then two-step correction back into the order block, and from there we want to go long. Okay, so this would be a bullish scenario, but of course we could have the opposite of that as well. So let's just assume that we have a bearish trend in the higher time frame. So this could be the daily, or this could be the 4-hour time frame. And then we have a break of structure. Following that break of structure, we have a two-step or three-step correction back into our Fibonacci level. And right at this area, we can look for a short based on the higher time frame. So we can either do something like this. We can go short here. Our stop loss just above the order block, and then we can target the Fibonacci extension. Or if you want to have an additional confirmation, you could even wait for a break of structure in the lower time frame. This could be the 15-minute or the 5-minute time frame, and then you could try to catch what we call sniper entry. Okay, so you could try to catch a trade based on the lower time frame. Okay, so we're basically trying to catch reversals, or in this case, this wouldn't be a reversal, but this would be a continuation of the higher time frame trend. But the break of structure in the lower time frame, which is, as I said, the 5-minute or 15-minute time frame, okay, is just an additional confirmation, and then the two-step also. Okay, so I don't want price to just give me a break of structure and then come back right into the order block. I don't want that. I want a two-step correction back into the Fibonacci level of this range in the lower time frame. And then what I want to do is I want to enter this trade based on the lower time frame. So I'm going to put my position here, my stop loss above the order block or the very last high. Okay, and then what I want to do is I want to catch this trade. My target levels would be this here, so the very last low, which is my TP1. The TP2 would be the Fibonacci extension within the lower time frame trade. And then what I can also do, I can even, once I've caught this sniper entry based on the lower time frame, what I can do is I can just target the higher time frame targets. Okay, so I can take my Fib level, right? So this would be the Fibonacci extension, the take profit 1 based on the higher time frame, based on the swing moves, and then this would be my take profit 2 based on the higher time frame. Okay, so what we're basically trying to do is we're trying to catch these sniper entries in the low time frame and then target these swing lows, these swing target levels. Okay, which makes this trade very powerful. And also, once you actually see this happening live on the charts, what's going to happen in your psychology is you're going to be far more selective with your trades. Okay, because all you want to do is just catch these perfect entries and then have a very high risk to reward. And then if you catch just 3 of these trades in a year, that will be enough for you. Okay, so all you want to do is just catch 5, maybe 10 of these trades in a year, and that's a really good performance. This is going to make you far more selective. And yeah, so you're basically risking the same amount of money or percentage of your account. So you could actually enter both of these trades. Okay, so this would be a higher time frame trade. You could enter this with 1%, and then you could enter this, which is another trade. I consider this to be a second trade. It's a completely different trade idea. Okay, you can risk 1% of your account as well. So in total, you would have risked 2% on both of these trades. And then what you can do, of course, is once price actually gives this move, you could look for another re-entry. So as long as price is doing these break-off structures and harmonic patterns, you could re-enter and re-enter at each of these different entry levels. Okay, so this could be a second trade, and then this could be a third trade, etc. Okay, but I don't want to overcomplicate it because this trade over here is going to be the one that has the best and the highest risk to reward. Okay, that's basically it. So let's just summarize the whole strategy. What we're looking for, we want to see a clear bullish or bearish trend in the higher time frame. This could be, as I said, this could be bearish or bullish. So in this case, we have a bullish scenario. In a similar way, we could just take this sniper entry and then target these levels over here. Yeah, but we want to have a clear bullish or bearish trend in the higher time frame. What is it that gives us a clear trend? Is basically higher highs and higher lows. That's it. So that's the first thing that we want, what we're looking for. The second thing is we want to see a two-step correction, okay, back into the 0.88 Fibonacci level, or this could be an order block, okay? This could be an order block as well. That's just an additional confirmation. If I see a clean order block, which leaves a beautiful fair value gap behind, that's perfect, okay? So what I want to see then is, this is just an additional confirmation. If I'm looking for a low time frame setup, what I can do is, as a third confirmation, I want to see the same pattern, so break of structure and two-step in the lower time frame. Okay, this is just an additional confirmation. And then we basically have the same target levels as in our first strategy. Yeah, my target level 1 is the recent high or low. Target level 2 is the Fibonacci extension of minus 0.27. And then my targets 3 are going to be my swing targets, yeah, which are going to be the target 1 and the target 2 based on the higher time frame. So based on the higher time frame, my target 1 is going to be this, and target 2 is going to be that. So if I catch a sniper entry based on the lower time frame, this could be my target levels as well. Okay, but what I'm doing always is, once we actually take these profits based on the lower time frame, I'm just closing most of my position. Okay, because I don't want to risk price to just give me my profits and then stop me out, which couldn't happen also, of course. Yeah, it can just happen anytime. So that's basically it, guys. Yeah, that's the strategy in summed up. And then there are some additional tweaks, some additional things that we can watch out for. So one thing is volume points. So meaning if we have a volume, a very high volume here, if we have a very high volume here, that is just an additional confirmation. And then what could happen is maybe we have another volume point here, very high volume here. So that could be our target. This would be an additional confirmation. Maybe we have another volume point somewhere down here. So this would be an additional target point as well. So it's basically, I want to see the VRVP as my additional confirmation. Okay, that's basically it. So let's just jump into the charts because, okay, I'm going to make a photo of this one. I'm going to download this image and then let's just go to the charts and get rid of this. Okay, this was a trade that we called this just this week. What we see in the 4-hour time frame, guys, okay, what we see in the 4-hour time frame was basically very simple. We had higher highs and higher lows. Okay, so this was one trade that we took last year. Let me just jump to the 1-hour time frame. So what we saw here was basically very simple. This is the 1-hour time frame. As you guys can see, we had higher highs and higher lows, right? Higher highs, higher lows. And then we created this beautiful order block over here. And then we broke this. We had another higher high. And this is just an additional confirmation. Okay, once we have this liquidity built up here, because this is a double top, liquidity is built up over there. Okay, so this is a triple top. So we want to target those levels. Okay, we want to catch our sniper entry. And then what we want to do is we want to basically, because a triple top or liquidity is basically where price is drawn to. Okay, like a magnet. This is being pulled by smart money. Okay, so what happens is we have a two-step correction back into the order block. So this is something like this would be a two-step correction. And then in the 1 minute time frame, I can't actually go back in history because I'm just going to show you that in the 30 minutes time frame. So what we had here in the 1 minute time frame, I don't know if you can see this, but in the 1 minute time frame, we actually had the same thing. Okay, what we had over here was a change of character in the 1 minute time frame, and then price actually came back into the zone. Okay, I don't know if you guys can see this, but this trade over here, okay, this trade, the small trade over here, was basically our sniper entry based on the 1 minute time frame. So according to the higher time frame, we've already established that price might go up from the area of interest. What I want to see here at this area, this order block, is basically just a break of structure and then a two-step correction back into my order block in the 1 minute time frame. And then I want to catch this entry and then potentially target these levels based on the higher time frame. And I remember that this trade actually gave us a 20-to-1 risk to reward. Okay, so that's just basically how it works. And then if you just continue, you can see that we did have some stop losses as well. Okay, and then here, I think we had another volume point here. Exactly, right? So this was our volume point. We did broke these lows. So I don't want to jump into the trade yet. I don't want to just try a long here and then try another one here and then try another one here. I don't want that, okay? Especially if we had such a huge sell-off. What I want to see is, according to the lower time frame, this could be the 5 minute or the 15 minute or the 1 minute time frame. What I want to see is the exact same pattern. Let me just go back in history and show you guys the exact setup based on the 15 minutes time frame. So that was basically it. Yeah. So I want to see a break of structure based on the lower time frame. And here you guys can see that we did have a break of structure here, over here. We did enter the area of interest. We did see the volume profile based on the higher time frame, right? So if we just go back, you can see that this was so I need to switch back to the 30-minute time frame. But if you just go back in the video, just like 30 minutes, at 30 seconds, you'll see that this area had a very huge profile, a very high volume. Okay, so right at that area of interest, we had a break of structure, and then we had a two-step correction back into the order block. Okay, this is my two-step correction. The same way, we could have just entered this position here based on the lower time frame. And then price actually came back into the same order block and gave us another beautiful trade. Okay, so this is basically it. It's very simple. So you guys can see we had another break of structure here, two-step correction back into this area of interest. But unfortunately, the lower time frame, we did not get a two-step correction based on the lower time frame. So we couldn't enter this trade based on the lower time frame. What we could have done is just the higher time frame and then let it run. You guys can see that most of the time it will actually give us the move that we anticipate, right? And then it reverses. Okay, good, excellent. Let's just go back to the next setups that we had over here. So here you guys can see here we did not have a setup because price did not correct back into the order block. But then what we had here was we had a break of structure. So this structure points were broken. And then what we had over here was a triple top. Yeah, so liquidity was built over there. So that could be our target level. What we could have done is just entered the position here at the Fibonacci zone of 0.88 and then target those exact levels, even target the Fibonacci level of minus 0.27. Okay. And then what's very important, a main challenge of this strategy is to just set and forget and let the trade run. Because what can happen anytime is just price doing these crazy things, coming almost back into our entry point and then give us the main move. That could happen. So it's very important in this strategy that we just set and forget and let the trade run and not do anything, not move our stop loss, not do anything, just let the trade run. Okay, so that was the other one. And then what we had over here, this was a beautiful trade that we called this week inside our community, and that gave us a 20-to-1 risk to reward. We can see in the higher time frame that we had the break of structure, and then we had a two-step correction, actually a three-step correction almost, back into this exact same order block. Okay, and we can see that this order block was actually basically took the liquidity of this low. Okay, so this low, this higher low was taken, the liquidity was swept, and then we had this main impulse. So I just assume that price does not need to go down to the other order block anymore. Liquidity was swept, And then this was the candle that the order block, the sell to buy candle. Okay, so price money basically sold to buy, main impulse, and then we had the mitigation phase and price came back to the order block. What happened then? So what I could have done here is just the following, right? Based on the higher time frame, I could just enter a trade here and then put my stop loss just beneath just this order block, the wick, and then target those levels. What I did though was I was waiting for the exact same pattern in the lower time frame, in the 1 minute time frame. And what we can see here was basically just that. Okay, price came into this zone, into this higher time frame zone, and then what we had was we had a break of structure. We had several break of structures. So this was my first break of structure, right? And then price just went up and up. It created this high. So you could have just take out your Fibonacci tool, then combine these two. What I did here was when price was here, okay, I wanted price to actually come back. So I just assumed that this was my high and I wanted to see a two-step correction back into this level over here. Price did not do that and just gave us a new high, okay, just gave us a new high. But I just said, you know what, I think that price is actually gonna come back into the zone and then give me my perfect sniper entry. What happens? Let's just take our Fibonacci tool and combine the low, right? So this low and this high. It did give us a two-step correction back into the Fibonacci level. So what I can do now is instead of taking based on the higher time frame, so instead of, I'm now in a better position. And what I can do is I can just put my stop loss below this wick over here based on the lower time frame. Okay. So my target levels based on the lower time frame are going to be the recent high and then the Fibonacci extension. And then I can also target the higher time frame zones. Where's the next zone? We can see that this is a very strong volume point. So I can just pull my target level to the upside. Okay. What happened here was when price actually gave us this move, it did give us new highs and new patterns. Okay, so as you guys can see here, for instance, we had a break of structure over here. We did have a break of structure over here. And then we had a two-step correction back into the Fibonacci level. And then this could have given us a new trade opportunity. Okay, but then once in a while, of course, price is gonna take out liquidity. So what it did here was the exact same thing. Okay, price gave us a new high. So this high was broken. And then I was anticipating for price to actually come back down here. It didn't do that. It gave us a new high and then finally took our trades perfectly and gave us a clean 8-1. Okay. So this was a clean 7 or 8-1. That's basically it, guys. It's very important to take partials and let the rest run. Okay, good. We had similar setups last year with Ethereum. So what happened with Ethereum last year was the following. If we just go back into last year, we can see that we had a beautiful break of structure over here. So this was our new range. What I wanted to see was, so we can basically see that price gave us a beautiful break of structure, correction, and then this break of structure over here. So if you just zoom into that area, we can see that this area was now our range. Okay, so this was now our range. And then I wanted to see a two-step correction back into this zone. And this order block over here was at the same time a volume point. Okay, so I want to look for long setups in my lower time frame. And the good thing about the strategy is once we actually get into the waves, what price does very often is it gives us these moves and these setups over and over again. Okay, it actually does give us these setups over and over again. Unfortunately, I can't use the 5-minute time frame because I actually wanted to show you these setups based on the 5-minute time frame, but I'm just gonna, okay, let's just go back, but we're gonna use the 30-minute time frame. Okay, we're gonna use the 30-minute time frame because I think that this is actually enough for us to see the patterns that have formed there. Okay, so right at this area, which was the volume point based on our higher time frame, we can watch out for break of structures, right? In the 5-minute time frame, you could have seen these structures actually better, but we can't do it here. But this was basically a 2-step correction back into some order block here, and then this has given us a beautiful 10 to 1. The exact same thing happens here, okay? 2-step correction back into it, and then boom. And then what happened here is the exact same thing in the lower time frame. We had a break of structure in the 1-minute time frame, and then we had a 2-step correction back into the zone, and this actually gave us a perfect 10 to 1 as well in the lower time frame. Okay, and what we could have done here, of course, we could just target these levels over here. Okay, so we're basically trying to catch a sniper in the lower time frame, but we're targeting the higher time frame target levels. Okay, and this is exactly what happened last year. We actually caught some beautiful trade ideas here, some beautiful 10 to 1s, 13 to 1s, 20 to 1s, and this is basically how it works. Then there is another setup that we had just today, and I'm going to show it to you guys. So what we see here in the 2-hour time frame is we have this beautiful accumulation phase, and we can see on the 2-hour time frame that we've built a very strong supply zone over here. Okay, so price tapped into it, reacted, and then broke, and then retested, reacted, broke, retested, reacted, broke. Okay, so you can see dozens of wicks at this area, yeah, which shows me that this is a very strong level from which price might actually reverse or continue its trajectory. Okay, what we had then in the 4-hour time frame was actually this beautiful engulfing setup. We caught some beautiful trades here. So this was the H4 engulfing, and that gave us this beautiful move. And then, so this is basically a trend move. This is a second trend move, the third trend move, and then we had this engulfing. So what I'm anticipating is for price to actually continue, at least correct this impulse to the, which is exactly what price did. Once we did have this correction, we created this huge wick, and then we had this bullish engulfing candle. So this bullish engulfing candle did engulf this doji over here. Okay, so what I'm anticipating is for price to just give us my next trend move. What happened then, if we just go down to the 5-minute time frame, we see that this candle over here, which was in the 5-minute, this was basically just the wick, right? This was just the wick in the 2-hour, 4-hour time frame. Right, so this wick over here, this wick that showed us that price rejected from this area, that was just these couple of candles in the 5-minute time frame. So I can assume that price is actually rejected and taken out the liquidity sitting at these lows. Okay, so what can I do? I can just look out, I can just watch out for a break of structure, a 2-step correction back into this order block, and then boom. Okay, so the first thing that I'm going to do here, after liquidity is being swept, I want to draw my, order block in my 5-minute time frame. Okay, this is my order block in my 5-minute time frame. So I want to see price actually come back to this zone and give me a break of structure in the lower time frame, which is, we can't go much lower. This is already the 5-minute time frame. So what we're going to do, we're going to have to switch to the 1-minute time frame. So this was the 1-minute time. We can see that price actually came into the zone, but it did give us a break of structure, but it did not give us 2-step correction over here. So what I could do here is just take a trade based on the higher time frame, which is the 5-minute time frame. I can just put my position here and then target the Fibonacci levels. Or I can still wait for price to come back into my order block, which is exactly what happens. Price actually tapped into my order block over here. This is the 1-minute time frame. And then you can see that we had this accumulation phase, liquidity was taken, and then we had the break of structure and a 2-step correction back into the order block in my lower time frame, which is my 1-minute time frame. This is actually crazy, guys. Okay, I could have just put my position here, and then so this is just a very small, this is like 20 pips, $2 or something, and then I could have just targeted my Fibonacci extension based on my 1-minute time frame. And if I'm smart and I go for the 5-minute time frame, so the higher time frame, what I could have done is just once I catch the sniper, I can just go for the target levels based on the higher time frame, based on the time frame above, which was the 5 minute time frame. So I could just target these levels over here based on my 5 minutes, but my sniper entry is based on my 1 minute time frame. This, if you understand this, you'll make money. If you understand this, you'll make crazy amounts of money. This is basically it. I couldn't take this trade because I wasn't sitting at the charts, but it's just to give you guys an idea of how powerful this strategy can be. Yeah, and you can potentially make 10, 20, 30% in just under 1 day, 2 days. All right, that's basically it. I hope this helps, and see you in our psychology modules. Take care.